What's up, crypto legends? We have him here. He is 𝗬𝗁. He is an expert in technical analysis. How are you doing, 𝗬𝗁, today?
I'm fantastic. Thanks for having me again, Andy. Lucky to be here in Dubai. For those of you that don't know what lekker means, it means nice in Afrikaans. And I'm excited to share some technical analysis. What is happening with the price of Bitcoin? Let's analyze it, look at high probable setups with good risk management, and just have a little bit of fun. Read through some of the comments, say hi to the community. How are you doing, Andy?
I'm doing great, 𝗬𝗁. I'm doing absolutely phenomenal. And yeah, basically, I think let's not waste any more time and go straight into the charts. I want to know what you see, high time frame, low time frame. I'm going to give you a little bit of freestyle. Then I'm going to give you my opinion, of course. And then out of it, out of both opinions, I'm sure we're going to get an insane trading setup together.
Perfect, perfect. Let me add my screen here to the stage. Can you see that? All good?
Yes. Yes, I can.
Right. I have no idea what's going on here, Andy. Over to you. Let's crack
Truly,
on. Let's crack on.
truly. Yeah. Truly, we don't know what the price is heading. We can take a look at scenarios, good risk management, and have probability setups. I gotta say, I've been really good with a few setups the last few days. Currently, I have one right now, which is, let's see if we get the bounce from current levels, because we are getting that, test of the lows. We maintaining. We got a bit of news today that brought us a little bit of volatility. So kind of defensive. We've got to move up, move down, move up. This is usually what we get with news. So it's like, let's see if we consolidate here and get a recovery. Anyway, sorry about that. It's on you.
No worries. Andy, I mean, the first thing I noticed is, do you remember this structure over here? Okay.
Yeah.
And also when I zoom out onto the 15-minute, let me just find it again. It kind of did look like a little bit of a diamond pattern over here, a reversal pattern. And I mean, I don't trade diamond patterns, but and they have such a low heat rate, even from a pattern perspective. I think they have something stupid like a 51% heat rate, something ridiculous.
Yeah, it's in between 50 and 60. Yeah, it's very low.
But what I liked about this structure is when I look at where we are right now, and I zoom in here onto the 5-minute, for example, it just, I don't know, it looks familiar. But I mean, with good risk management, we can speculate on either up or down. And it looks, I mean, we had the news today which created this volatility, but I do like the volume spikes here in the middle, which is familiar with the diamond pattern, where you have the low and the highest point in the middle, and perhaps we're going to consolidate here a little bit more and then either have the breakout to the upside or to the downside. What I did like about this dump here this morning here to the downside is that, and me and you actually spoke about it this morning when we were over here, when this was not here just as yet, we spoke about, yes, this can definitely be a V-shaped recovery here to the upside. And I remember the conversation with me and you used to say that, well, wouldn't it be nice if we can just go and grab that low again to get in and then get a nice little recovery to the dead cat bounce over here.
Yeah.
And
classic.
That basically played out to perfection. I mean, if I zoom in here, dead cat bounce, I mean, we missed it by like $5. If you're aggressive with profit taking, I mean, you need to take profits on the way up. So I mean, we SFP'd beautifully from this low over here. Nice little dip, and these are the SFPs, Andy, that I just love to play, where you get the dip, you get the recovery to the upside. Okay, made quite a nice high recovery here to the upside, almost claiming this high over here, and then we did it again. Oops, we did it again, right? Failing to break through another SFP, right? But this time it claimed the highs over here and also the dead cat bounce. I just can't help but lean towards the side of, usually when you have a dead cat bounce and you tap that level for the first time and you tap it for a second time, it becomes weaker, which means that you need to come and fill the gap. Okay, it's just a game of probabilities. So there's a slight higher probability that we could break to the upside based on the fact that we've tapped this level twice already. It looks like a diamond pattern that's forming here, and perhaps a consolidation and a breakout is in order, where we'll just keep an eye on this trend as well. Where I think you mentioned this during one of your updates, Andy, where it kind of looks like a little bump and run scenario that's building up here. Okay. So when I just simple trend line strategy, you have, I actually like this as a bump and run where you have two taps. Okay. This to me is those beautiful bump and runs where you have two taps, you have the nice bump face here to the bottom, you have consolidation building up that spring, and then let's wait until we get to the trend line and observe the price reaction when we get here. I mean, obviously you want to claim this high, right? You want to break through, you want to claim the high, and you want to go. Ultimately, this is the ultimate target for bump and run, is to go and claim this $63,500 area, give or take. Okay, I do have a suspicion that if the scenario had to play out, we break the trend, we come up for a retest, we find continuation to the upside, it looks like we could definitely tap this naked point of control over here that we've just not been able to tap during the last week or so. And I mean, obviously, when we get to that level, I think further continuation is that, do we SFP? Okay, or do we smash through with high volume, flip it into support, and perhaps you SFP from the weekly, you flip the daily naked point of control into support, and this becomes a scalp trade here to the upside. You then break through, okay, and flip this weekly level into support. Obviously, we'll just have to observe the price reaction as we hit each level. Because I mean, there's quite a couple of ways that this can play out. And I mean, we're talking about bullish case scenarios now, and we'll tackle the bearish case scenario in a moment. We have to, just speak about both. The plan, what is the plan? The plan is, if we do break out to the upside, and I mean, this was the best entry area. If you are inside of this trade, I'm sure you're inside this trade, Andy, if I'm not mistaken.
Yes, that is correct. Yes.
Great. Absolutely. Okay. I mean, this is ultimately the best entry. If you miss the entry over here, you're going to have to wait for maybe the acceptance back above these highs. Okay.
Yeah.
You want to break through, and you're most probably going to tap that trend as well. You can either break it, but you want to flip these highs into support over here. Okay. You want to see some nice little green volume kicking perhaps over there. You want to see us break through the highs, flip it into support, and then perhaps that is your long trigger over there with good risk management. If you've missed this entry over here, I mean, ideally, this was the best entry from a swing failure perspective. A little bit late over here, but I mean, with good risk management, you can still make some significant gains to the upside.
Absolutely. Yeah.
Right. And I think, Andy, I mean, from a long setup, this is potentially what I'm looking at, is to say that, how do we react here at the trend? Do we flip the highs into support? If we do find upwards momentum, we still have this trend to contend with. This trend to me is really at the moment like a nothing burger. I prefer the horizontals, although I do use the diagonals for trend line breakout strategies, but I'm not too keen on this bigger trend over here. I'm more interested in this naked point of control, do we SFP? Do we smash through SFP from the weekly, flip it into support for continuation? And I think we're a little bit far away at the moment. So perhaps tomorrow or the day after, if the scenario plays out, this is the area that we will be talking about. Okay. Then let's do you have perhaps anything to add from a bullish perspective before we dive into the bearish case scenario?
That is exactly what I also am looking at. A sign of strength, no doubt, would be breaking above that lower high resistance, kind of a bump and run phase. And if we get a nice breakout above the consolidation highs, like you were mentioning here at 62,200 approximately, or what is it? There's around 62,000 range. Yeah. If we do get that solid breakout above that zone, which would be kind of the value area high as well from that range with the trend line, it's going to be a very good sign of strength, in my opinion. And we could be looking for some scalp and day trade longs till we get to those highs from yesterday, right? I think a lot of people were expecting the price to to push through. There's a lot of liquidity at 63.5, 63.6. We never got there. I had a plan. I usually say to my viewers as well, there's a lot of them are saying, hey, there's a lot of liquidity here. There's a lot of liquidity. We're going to grab this liquidity. And I've seen liquidity, billions of dollars, not being tapped by a couple of dollars, right? So we can probably get that liquidity later. Or maybe that liquidity is big whales. They're big players, all right? Because you can see the liquidity from the market makers as well, right? Maybe they are tricking that we're going to grab that liquidity, and they like, oh, hang on a second, you know, I'm the big daddy here. If I want to dump the price a few $1,000s, I will, before you even catch this liquidity, right? With a huge amount of limit orders, right? Sell orders, and this is what we get, right? The price just $100 away from hitting that massive amount of liquidity above 63.5, and the price just rolling with the double top, right? So yeah, just something I wanted to point out.
Yeah, I mean, to your point, Andy, you just never know whether this is dumb money or smart money. And if it's dumb money, the likelihood is it will be grabbed. And if it's smart money, it could be a trap where it makes people believe you're going up, but meanwhile you're going down to grab the liquidity below. So it's just it's not a reliable indicator. It is, I suppose, it's a sense of where liquidity lies and what is going on. But I've never found success in trading liquidity. Looking at the heat map, it's nice to look at it now and again to see where the liquidity lies. But not a reliable indicator from a trading perspective.
No.
Okay. The other thing
I just wanted to point out that I jumped into the short position yesterday when we double topped locally, and we didn't claim the highs from last Friday as well, right? And I know that could be a barrier for a lot of people to say, that double top right there. If you do take a look, zoom out a little bit, we did not even claim the Friday highs, which was sitting just there at 63,500 last Friday's highs. So a lot of people might think, I'm not going to short here because we haven't claimed those lower highs from Friday, and there is a bunch of liquidity, right? But if we double top locally, I'm willing to take that chance, no doubt. So I did take the chance because I know that you don't need to take the high, and you don't need to get the liquidity. If we double top locally, it gives you a good risk management play, and it's worth the shot. So yeah, just wanted to point that out.
Yeah, no, definitely, Andy. I think I was also talking about this level when we were trading over here, and it was, you know, it's one of those things where I even told the community, why get up here all the way, you know, and grab the high and not take the liquidity that's lying above? Because I mean, looking at liquidity, it was just like, it's there. Why aren't you taking the liquidity? You've come all the way. You've nibbled at it. You've eaten one apple from the tree, and now you're like, okay, I'm full. I've had enough, and then you fall down. Like, it's just very frustrating. But I mean, from failure perspective, it just ticked all the boxes. You fail to break through. You get acceptance back below this high over here, and you're like, okay, stop below the high, and you ride the momentum here to the downside. And I mean, this to me was a good profit-taking area, and I'm sure you took this trade, if I'm not mistaken.
Yeah, correct. That's where I took most of the profits, and then the price even dropped much more. But anyway, it's the target zone. It is the target zone. You can take it as, if you hit that level and you recover, then you take all of the profits. And if you break out successfully, you maintain that short position open, right? But anyway, I was happy just by taking the profits there. I had a limit take profit there anyway, so it was just hit, and that's it.
I mean, Andy, I mean, we always want volatility. And I think if you want volatility, you basically got heaven this week. I mean, just massive drop here to the downside. You have this kind of Bart-Simpson, you know, the new pattern that everyone talks about. And then you have the Bart-Simpson here to the upside. Massive pump, massive pump, massive dump here to the downside. I mean, you're not going to get more volatile than this, right? Trader's paradise over here.
Yeah.
Okay. So I think that covers basically the bullish scenario, Andy, that I'm seeing here at the moment. And as you can see, getting kind of supported here by the value area low at the moment. Okay. That's what you want to see for bullish momentum to continue, is that, you short the top, you long the bottom until there's no more range, and you break out, and then you've made a lot of money, longing the bottom, shorting the top, in, out, in, out, in, out, in. I mean, there was like 1, 2, 3, 4, 5, 6, 7 side of that little range over there. Okay, currently getting supported here by the value area low. So from a bullish perspective, I think we all know what we are looking for at the moment. We need to basically break this value area high over here, okay, with some nice little green volume, not reject here by the point of control. You want to see us perhaps, break through, flip it into support, and then let's see what happens when we get to the trend. And from a bearish perspective, it's basically in reverse, right? You want to see us lose the value area low. You want to see us lose the value area low. And I want to say with significant volume, but look what happened here. You lose the value area low with significant volume, and you just bounce right back up.
Yeah, that was driven by the news, so it's not like real technical volume, I would say, right? When we have that big volume on the chart, when we have a news event, I say it's not real volume, because it can pump massively with high volume and then have a massive crash, or drop and then have a massive pump. I don't take that volume from news reliable, because it's driven by news. So
So, I mean, Andy, from a bearish perspective, I would like to zoom out a little bit and just look at the structure over here, okay? Let's do this, right? Because I think what is concerning me, and I have mentioned this during my live stream, I think yesterday as well, is to say that when I take a fib from the low to the high over here on the 1 hour time frame,
618.
Why did we not, it's a little bit concerning to me. Why did we not tap at least the 0.618 here? We literally just front ran that level, okay? And it could be a market maker's tactic, is to say that, well, everyone has got limit orders and waiting for this juicy level to be hit, and let's go and front run them, forcing them to buy in at higher prices, okay? Maybe that's the strategy behind it. But I'm also considering from a short perspective, if we have to lose this area over here, we break down with high volume, I think there's a high probability that you're going to want to claim the liquidity below these lows over here. It just feels like if you're going to come down, grab the liquidity, perhaps tap the 0.618 and wait for that consolidation. Okay.
Yeah, it's no doubt a level of, I would consider a swing failure pattern from that low, to be honest. But I would also see the consolidation kind of beneath it, right? Yeah, it's going to be interesting. It's going to be interesting how.
And I think it's about observing what happens when we get here. So it's either SFP from this low. And I mean, the 618 is so close, and you're most likely just going to tap that 618. And as you recover above this level, what happened over here? What happened over here? I mean, those are the swing failure patterns you want to get into. And then when you have your trend running down here, you are one of those people where they're going to ask, how on earth did you get an entry over here? Because I'm playing the breakout over here. Okay. It's just about swing failure patterns are extremely powerful. Yes, they do require a little bit of screen time, sitting in front of the PC, longing, your market order, managing your risk and your stop loss, moving to break even as soon as you're moving to the profits. And then most retail traders and breakout traders will enter over there. And obviously, I'm not bad-mouthing breakout trading, because I do it a lot myself. With good risk management, you can still get some whiskeys at the bar. And so, it's just, that's the entry that you want. And if you're too scared and you're unfamiliar with swing failure patterns, and trend line strategies are a better buy or option for you, you wait for the trend, and perhaps you get that little low before you break out, so you know where to put your stop loss. Never risking more than what you can afford to lose. And what I like to say is never risk more than 1% of your capital on your stop loss. Andy, I think a lot of people get confused, even during my streams, when we talk about never risk more than 1% of your portfolio. They think that they need to trade with 1% of their portfolio. I don't think people understand that. What I usually mean, just a little bit of education, is that when you have a trading setup, okay, like this, and your stop loss, okay, let's just do it exactly, is 1% away, right? And this is perhaps the setup that you're looking at. 3 risk to reward, whatever the case might be, your stop loss is 1% away. The simplest way that I can explain it, and I'm not sure if you have a different way of explaining it, Andy, is to say that I can risk 100% of my capital at 1x leverage because I will only lose 1% of my capital. If my stop loss is 0.5% away, then it means I can risk 100% of my capital at 2x leverage. Okay, this is how I like to explain risk management. It's not to say that you only have to trade with 1% of your capital. You should just never lose more than 1% of your capital as a rule of thumb. Okay, some people apply up to 3 to 5%. Some people apply less risk management. I just like to keep it around numbers to say that, guys, you shouldn't risk more than 1% of your capital per trade.
Yeah.
Right. Okay, so Andy, I mean, what I'm still looking at here from a bearish perspective is to say that we have to observe the price reaction when we get to the 0.618. Because if we're going to waterfall here, you grab all the liquidity below these lows and you just bam, and you start waterfalling. I'm not interested, okay?
Yeah.
I will still be interested in the 786 level over here, okay? I just want to see if I switch on session. Let's analyze a little bit more. If I switch on session volume profile, is there anything that stands out? Oof, not much.
Yeah.
Value area high has already been tapped. There's no naked point of controls.
Yeah, we haven't got much there regarding levels. I'm not sure if there is a daily level.
You're right. You're right.
I'm not sure if there is.
Levels. Ooh, no, not today. Let's go switch on some daily levels. You're right. Okay, that is the next level that I'm watching, Andy. You're right. We do have an untapped daily level here at the 0.786, which, okay, let's see. Let's just for the fun of it, does this make sense?
Yeah, I was just gonna talk about that, but even because yesterday we did not claim the highs of Friday. Even that harmonic, the B point should be at the one before. So that low that not the C point, the B point, the one before.
Yeah. You see, it depends on. I suppose it depends on which exchange you're using. Because
sorry, my bad. Yeah, because I think those highs from Friday were actually hit on some exchanges, weren't they?
Yes.
Those. Okay. So my bad. Yeah. I'm looking at Bybit only. So, but yeah, if those highs have been taken on other exchanges, no doubt that C could definitely go there. Yeah, for sure. Yeah, it definitely looks like it. And it's very symmetrical.
What I do like about it is now it looks a little bit more symmetrical. I like the left and the right wing feels like it's starting to balance a little bit more. And I think we spoke about this on Sunday or Saturday. I can't remember. We actually spoke about this harmonic. And saying that, well, if we don't claim the A point and we still stuff around in this area over here, there's definitely a possibility that we could be forming a larger harmonic here. So from a bearish/bullish perspective, if we lose the 0.618 level, I am very interested in to see what's going to happen over here, where you have an harmonic, you have an untapped daily level, and the 786.
Okay. I like it. It's going to be looking very symmetrical. If we
also,
drop there.
just for the fun of it, let's take a time fib from the low to the middle, okay? And yeah, I mean, between the 618 and the 1-to-1 ratio is where I would like to see the magic happen. But it can also happen right now because we have tapped a minimum target, the 0.382. Not likely, but I mean, this is the golden zone over here. Okay.
No doubt. Yeah, you got a couple of more days for that to happen. Yeah.
So I mean, this can Andy. I mean, it can still play out by Friday and even over the weekend, Saturday, Sunday.
Yeah.
And then
it would be if we do get a nice reaction there. I think it's worth a swing long position because your overall target is that A point, which is above 65,500. So if you are getting in that $58,000 range, right? 58, 59, that is a $7,000 move to the upside, right? It's going to be a swing trade, so it's not going to shoot up in a matter of 1 day or 2 days. It's likely going to take some time, at least 4 or 5 days, to reach that 65.5K and finally grab that liquidity, right? I think most of the people that, if those are whales that we have the liquidity above 65K, they'll no doubt be taking some profits as we lose that that B point on the harmonic, right? The $60,000 range, right? As soon as we start dropping to 59, 58, they'll be taking profits very likely from that liquidity. We'll likely have that liquidity go down and then maybe get the bounce. But yeah, it is for a swing trade. It looks pretty good. I like this. It looks very symmetrical. If we were to drop down there in the next couple of days, would be willing. I would actually take the shot. If we hit that level, get a reaction, I would definitely take that shot. No doubt the 618 is a take profit one, but I would take it as a swing trade. I would get in with low capital, low leverage, risk 1%, have a decent stop loss. And if we do get to $65,000 and above, then you know that from that 1% risk, you can be making in between 3 and 4%, right? It looks a really good risk reward if we manage to get to the highs of the harmonic, right, which would be the ultimate target. Yes. I think it's realistic.
This is the absolute beauty of a trade. I mean, I agree with you, Andy. If you put your stop loss where you're supposed to put your stop loss, below the lows over here, because the harmonic will be invalidated once you hit the lows over here. Then it's, you could have a double bottom and then continue up, but you have to apply good risk management. But from a swing trade perspective, definitely something that I will be playing as well, Andy. I mean, if this scenario had to play out, the risk to reward is 4 to 1 risk to reward. And obviously, I'll be taking some profits on the way up. I'll be taking profits here by the 618 from C point to D point here by the 618. Definitely a profit-taking zone here. And then at the high of C, you leave, and then you leave some of the position open to come and claim the A wave, depending on what you see on price action. So profit, 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 trade close. And then obviously, I think, another thing that I would definitely consider is as we move up here, I would look at just moving up my stop loss.
And if you do get stopped out at break even and you form a local double bottom, then possibly re-enter that position and even getting into a better position, right? If you double bottom from those lows, it's a zone that I will be looking for double bottoms, no doubt.
Yes, we love some double bottoms.
Yeah, man. That's really all what I've been trading the last few days. We formed double top on Friday, shorted that. Didn't manage to catch the long position before yesterday. I think, just before we had the pump, but managed to catch the double top again yesterday. It was also mentioned on a video update that I provided. Yeah, that one, managed to catch that one. And in this double bottom now, however, I'm taking it as a swing long. I got very low leverage, very low capital, because no doubt it is disturbing that we could actually come back down and get those lows. So I've deleveraged a little bit on this long position that I'm currently in right now, because if we do recover from here and we start breaking that lower high resistance trend line, we could be going to 63.5, yesterday's highs, grab that liquidity, and if that gets power, we're looking for 65.5, right? So even though I'm risking very small amounts right now, my stop loss is very tight, it's still a 4-5 to 1 risk to reward. So it's definitely worth it, no doubt. I would take it more as a swing trade, and I'm not a swing trade at all myself. But I've taken it as if the price does recover from here, it's a trade to have open, no doubt.
Definitely. I think it's I must be honest, Andy, I do like this structure over here. Okay. And what I do like about this structure is that it looks impulsive, where you
Yeah,
can almost count like a wave 1, 2,
no doubt.
3,
Yeah.
4, 5. I do like that this is an impulsive structure, and this looks very corrective. When I look at the previous structure that we formed over here, what really concerned me, and I also spoke about it during my live streams, when we were inside of this structure and we started correcting, expecting that explosive move here to the upside that didn't come, is that I really struggled to count this as an impulsive wave because of all the overlaps. It just
very choppy.
felt more
That does not.
𝗖𝗿𝘆𝗽𝗶 whatever you want to call it. This didn't feel impulsive or look impulsive, where I like this structure more, and it feels like it has a chance for us to claim the high again.
Yeah, and we need to realize as well, when you zoom out on the higher time frame, that movement to the downside, hitting beneath $59,000, 57, right? It is a sweep of the entire lows of the range of March and April. So it's kind of, it's a kind of a spring point, right? We've come down to, we've come down to the lows already from March and April. So it's like, all right, we've been down now. Is it time to go up? So, and that bounce was epic. We didn't have nice volume, and now the last week on this downtrend, it's extremely choppy. I don't see very much power on this movement down, and this is why we're giving it a chance for a possible recovery. Right, as traders, this could absolutely get wrecked and go down to 52K. Right?
It's possible. And then we'll say that, well, we applied good risk management. Now we assess.
Exactly. No shame at all saying when I'm wrong or when I'm right, because like you said, we talk about risk, we talk about risk to reward. If we do get to the upside, this could actually run, and this is where I'm placing my stop loss. I'm risking 1%. It might gain 3-4% if this plays out, and just slowly scaling.
But I mean, I definitely want to give this a chance. Because I like this structure. And I mean, technically, if you apply good risk management, why not? I do like the daily level here from a bearish perspective / bullish perspective. I do like the daily level there that could give us that move to come and claim this high again. And even the 618 and higher, right? We just don't know. This could be the move that says 1, 2, 3, 4, 5. You just never know. Of course, this structure makes sense to do this. Okay, we don't know if it's going to be an ABC to the upside, if we're still going to correct, but it has a chance for now. And I agree with you, Andy, is what I also like about looking at the structure, if I just take the dailies here out the way, clean it up a little bit, is that I still like that this impulse has the highest amount of volume compared to the correction so far. Okay. Yes, that's high, but it's still not as high as the green volume over there, which still tells me impulsive, corrective. Perhaps the bounce is going to come at some point. Unfortunately, nothing's guaranteed in the market. I wish it was, then we would all be billionaires, right?
Exactly. If you knew exactly what is going to happen, you wouldn't have to apply risk management, right?
Yes, exactly. You would just leave your trade in and use that reverse feature the whole time. Up, down, up, down, up, down.
All right. I see you've zoomed out a little bit now. Were you going to say something about higher time frame?
The last thing I wanted to touch on here, Andy, is to say that, and perhaps I'll just take some of these trends out to clean it up a bit, is that keeping it very simple, I'm tracking this momentum where you connect the low, and if we do take this low over here, right, we do have this beautiful liquidity here at the bottom, and I think that's also in confluence here with the 618. If I do this, maybe just take this one out the way, 618 level, 786. I actually like the 786 level more because of the support that it's providing here above the highs. Okay, that's why I like the 786 level more. Technically, it feels like it has stronger support. Although I know that there's a consolidation, there's massive liquidity below these lows. So I mean, if we do lose this low, there's a real possibility that we can bounce on the trend together with the 618, you grab the liquidity, and even if you're weak below and you get acceptance back above, okay, the market structure from a bullish perspective is still intact. You're still making higher highs, higher lows, and off to the races you go. Okay. So yeah, Andy, that's basically what I'm looking from a larger time frame perspective to say. From a bearish point of view, there's still a possibility that you come and tap the trend. Okay.
No doubt. Yeah.
I mean, yeah.
No, yeah, for sure. You know that there's this monthly candle that is very disturbing. We've got a 𝗬cie engulfing candle on the monthly time frame, and that would be, it would make sense that if we could come down to 52 and see a 52 hold, because that is just very, when I look at the weekly looks bullish, but the monthly does not look that bullish. It's just that chart on the monthly looks awful. The weekly looks pretty good. You got a hammer candle. Oh yes, this is bullish. But when you zoom even higher to the higher time frames on the monthly, which you should, higher time frames should look better. And when a higher time frame doesn't look that great, I mean, that monthly candle from April was absolutely horrendous, closing beneath the March open. And anyway, it's probably going to bring a short-term volatility to the downside, maybe between this month and next month. Ultimately, I do see the bull run continuing on higher time frames, right? Whether we do go to 52 or to $48,000, I think it's going to be like a shakeout. I wouldn't see Bitcoin going down to 30,000 or even more crazier 20,000, right? I think it's just going to be a shakeout. But anyway, it's interesting times. Interesting times ahead.
I think what's also interesting, I mean, if I now really have to pull out the bear and get all grizzly on us, is that, I mean, if this plays out and we get some massive fear in the market, black swan event, something happens, energy crisis, we could still lose this trend over here, right? You lose this trend. Let's say we break down, we lose the trend, but you can still bounce on this trend that we haven't tapped in many, many, many months, okay? You could still bounce on the trend and then find continuation back to the upside. And then from a monthly perspective, you still have a low, you have a higher high, a higher low, and so the trend continues to the upside. So, I mean, you don't want to get here, but I'm just saying, you know, if we had to play out the scenario, it's still bullish.
On an Elliott wave perspective,
yes,
that we have created the lows in November of 2022. We know that move to the upside during the Q1 of 2023 is, if we are looking at Elliott wave perspective, right? We know that that's the wave one. And the corrective structure that we had in the summer of 2023 is a wave two.
Yes.
This massive move that we've had during Q3, Q4 of 2023 has been a wave three. And right now we are at a larger wave four. Even though when we look at micro counts, it doesn't make sense. We should be creating another all-time high to create a fifth wave, right? Inside of this third wave. Right, when we do analyze the lows from August of 2023, from those lows, it looks like we've had only 3 waves to the upside.
Yes,
it looks like that we are.
And I guess what you're alluding to, Andy, I hear exactly what you're saying is, let's say, you know, without going into the ABC corrections and the flats or whatever, let's just say from a larger time frame perspective, this looks like 1, 2, 3. Okay. And still missing the third wave, because this is too low for a third wave. This can't be the third wave, because ideally in Elliott wave theory, your third wave should not be the shortest wave. Okay.
Exactly.
So let's count this as the third wave, and you still need 4 and you still need 5. Okay. And the rule for Elliott wave theory is to say that, well, if you're going to start losing the 50% FIB level and dancing around here on the 618, you have a higher probability that this was the end of the structure and you've counted something wrong. Okay. Or this was a larger ABC here to the upside, and then, you know, you're gonna, so
Well, that
Here's what
will
I'm
be
trying to get at
devastating.
here. For us to still have a chance for this leg,
Yeah,
you
it's
don't want to lose $50,000, $49,000.
exactly. Yeah, that's what I was going to say. You know, that fourth wave should only bottom at 50K zone, approximately.
Yes.
49, 48 can be tapped, but ultimately not breaking successfully beneath that level. No doubt, if we do consolidate right there, if we were to get that drop in the coming weeks, it would be the swing trade level to speculate on a long and stop loss beneath the 618. If you want to speculate on a fifth wave creation, right?
Yes.
And you're targeting all-time highs, so it would be a trade that's probably going to last a couple of months, even looking at the daily chart and weekly chart. Yeah. Anyway, what else?
I think lastly, Andy, just lastly, I mean, when I start talking about Elliott wave theory, I get all excited and goosebumps. And not that I trade it, I just find it fascinating. Okay.
Yeah, me too. Me too. I like it. I'm not an Elliott wave expert, but I understand it. I get lazy when you need to do micro counts and everything. I like to do a higher time frame Elliott wave, so 4-hourly daily chart. When I need to go zoom in on 15 minutes and 5 minutes, like, yeah, no, maybe locally I like to take a look at it. But yeah, this is the kind of Elliott wave theory that I enjoy watching, because a lot of people are against Elliott wave theory. But I think it does play out. The thing is, there are so many scenarios that can play out on Elliott wave theory, such as a B wave in a flat, or a regular B wave, right? It's just
running flat and
running flat. Yeah, it's just a B wave can hit here, 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 or here. So it's like, you need to understand that, and a lot of people, you know, don't understand it and say, this is a bunch of BS. You know, it just doesn't work. It does work. However, there's bearish case, bullish case, and multiple different corrective structural ways as well. So
yes.
People just like, yeah, just haven't got any time for that. So, but it's fascinating, no doubt. I really like it, because a lot of the times it does play out very, very nicely.
Yes. And I suppose, Andy, just to end it off here with the Elliott wave theory, this is the structure that I see most of the Elliotticians are watching. Okay. And I'm not saying this is the scenario that's going to play out, where when you start counting the waves here, 1, 2, 3, okay, which is not finished. A lot of people saying wave 3 is not finished. And the reason they say this is not finished, because they can only count 1, 2, 3 waves inside of this structure so far, where a lot of them are speculating on this low being number 4, okay? And I mean, we can dip a little bit lower. We can still come down here to $49,000, no problem. And then the wave is still intact. And well, let's say this is the low for now. Let's just speculate that this is the low for now. Everyone is now expecting that fifth wave inside of the third wave, where we will then start seeing a deeper correction to the downside, completing the bigger fourth wave of the green structure over here. So I know it gets confusing and a lot of people don't follow, but I know for you it makes sense, Andy, is that this is kind of what the Elliotticians are looking at from a preferred scenario at the moment, is to say that this was not the high just as yet. We are still going to claim the high, make everyone extremely bullish here to the upside, then finish the third wave, and then extremely bearish again. What on earth happened? I thought we're going to $100,000 and now we're falling back down again. Then you get this explosion over here.
Yeah, there's still a lot of time on the macro. There's still a lot of time to play around. Claim all-time high again, drop back down, get the people saying it's over again. There's going to be a lot of tricks, but overall the trend is bullish, and we need to understand that it's until, if we do hold right those levels of invalidation, in this case it would be the $43,600. It kind of needs to hold that level, right? We cannot drop beneath that level. So 52, 48K, it's still okay. It's still an okay zone. It would be the moment of truth of the bulls, right? to maintain the impulsive structure, because once you start losing that 618 at 43,600, then you come with the extreme bearish case scenario that all of this momentum in between 23 and 24 has been a massive ABC, which also makes insane sense. There's so many fundamental things that also that can be in confluence that this has been the top.
Yes.
But I think the Federal Reserve is going to save the day once interest rates go down and the money printer goes on.
I can already
Insane.
guess the money
It's going on.
Yes.
But I think it's not going to happen yet. We do have CPI tomorrow, and depending on that, we're going to see the results of inflation. But I think it's not going to happen anytime soon, and the market can be seen a few months of tumble. If we were to drop now to $52,000 to $48,000, it's over a $10,000 drop, and people are going to panic with that drop, right? It would be a devastating correction, no doubt. It would be a big drop, and a lot of people are going to start, doubting once that happens. But then with it's going to be interesting. I do think we do have a few more months with interest rates quite high. We do have an election in November. I think just after the summer is where we're going to start picking up. I think we're going to have a little bit of a sideways momentum market during the summer. That's my opinion anyway. I think it's going to be a little bit of a downtrend sideways, relief pumps, or claim that all-time high, get bullish again, and then we're going to see the big epic correction. But
and this is kind of what I am looking at. When I tell everyone I like the structure that we formed over here, I like this structure because this could be the structure that takes us out of this consolidation. It claims the high, it completes the third wave, and then we start seeing a deeper, slow grind to the side. Very, very boring, more boring than what we've seen over here, because fourth waves are just absolutely boring. I know Andy is going to make a lot of money inside of the fourth wave because you just absolutely shine in ranges.
Yeah, if I need to wait for the price to come at a swing trade long position, I won't be making any money at all. So I need to trade the range. So trade the levels. Anyway, very, very interesting scenarios. It's gonna be very interesting. If we were to come down to $52,000 in the next couple of weeks, that is going to be the zone. It's going to be the zone. However, we should be creating one more move to the upside still to create the end of the third wave, right? I think people misunderstand that the bull run it takes a long time, and at the end is where you get the massive blow off top, right? You get the massive rally, and it usually happens. Entering into the 2025 in this case, from the previous bull market, we didn't start rallying till the end of 2020. So if you take the 4-year cycle theory, right, which is kind of following, it does kind of follow 4-year cycle. We shouldn't be rallying like crazy till the end of the year, right? You can see that massive rally in September, October, November of 2020. That's when we started to take off very aggressively into Q1 of 2021. So if we do take that 4-year cycle theory as well, with the election year in November, we should be seeing the money printer going on very aggressively after a potential correction in between the summer and September. But then by the end of the year, an increase, a recovery, a market recovery. And it makes sense for me that the epic bull run, right? The epic bull run in this bull market should happen in between Q4 of 2024. It should start off in Q4 of 2024. And then in Q1 is where things, Q1 of 25 is going to be the moment where things start getting crazy. I think.
Still, I mean, the halving was a nothing burger. Andy, we spoke about the halving before the halving took place, and you still asked the question, David, what do you think is going to happen during the halving? And we both agreed it's going to be a nothing burger. And
yeah, we can see that. Yeah. Based on previous data, right, on previous halvings, there's really not much has been going on. Also with Hong Kong, right? A lot of people with the Hong Kong ETF was like, wow. You know, Hong Kong had outflows, I think, yesterday or today, and they're holding about 3,000 or so Bitcoin after a few weeks already of that Hong Kong ETF being approved. It was funny to see how on Twitter a lot of very well respected people and they have a huge amount of followers. I think it's just misleading, but a lot of people were saying, yeah, we're going to go to 100K. This was it, right? Asia is huge. Asia is going to, the Hong Kong ETF is going to have massive exposure to big companies in Asia. And realistically, when you compare Hong Kong economy and investments, it's something like a 50th of America's one, right? Yes. The US. It's a 50th.
Not enough to move the needle.
Oh my goodness! It's just a teeny weeny part of US's economy and you know, investors and companies. So it's very, very small. And I knew it basically that we're not gonna get a massive rally with the Hong Kong ETF, but a lot of people were hyping it up, and I was like, no, it's just not. It's not the market. The US ETFs, we definitely got big inflows during the last few months till March, and now it's pretty flat. So
yeah,
the buying pressure has kind of disappeared. We're not seeing massive. There's a lot of bullish news always. This company is embracing Bitcoin. This, that, the other. I feel like we need a deep corrective move. We need that movement down, right? I think, in my opinion, because we need a shakeout. We need a proper shakeout. I'm waiting for that. We talked about this the other day. I'm waiting for a C19 2020 shakeout kind of style. Get the drop, get the epic dump of 10-20% at least on Bitcoin and at least 40-50% on
Andy wants to see this.
Yeah, it will be very disturbing.
Yeah.
If we
that's about a 25% drop.
Yeah, it will be disturbing if we do get beneath that $43,000 range. It will be very, very disturbing, because then you're just breaking a lot of structure.
Yes, especially if you lose this low over here. And I have seen that some expert analysts do say that they believe if we lose this low, then the bull market structure is broken. So I can just imagine, to your point, if we had to do this and you lose this low, you still bounce on the trend over here. This is just going to scare the crap out of so many institutions and larger whales as well, only then to start getting the recovery back to the upside. I mean, you know, like Warren Buffett says, when there's blood in the street, this is where you should be buying. Yeah. I mean, I would love for that to play out as well, Andy.
Would you? It does not make sense that rally that we had in October, November, and December of 2023 to be a third wave, right? Macro. It is shorter. Yeah, it is shorter than the first wave up, right?
Yes. Yes. It's just way too short. So, I mean, if I take a flip from the low to the high, oops, not this one. Let's just do a quick one over here. Flip from the low to the highest. Let's say that was the high.
Yes.
Okay.
Exactly. Yeah.
And we go to the lows. Well, it is higher than the first wave. So it is higher. It did tap the 1-to-1.
It is.
It is. So
it would be a valid
third wave.
Valid third wave, even though fifth wave is the largest right now, but that's acceptable.
1, 2, 3, 4, 5.
Yeah. And what if? Because I think people would be, you know, once you break this kind of structure that we talked about, right, getting beneath $38,000, for example, right? $40,000. There's a lot of people are just going to throw the towel. They're just going to say, right, this was it, right? You know, everything's bearish. Look at the massive dump that we, you know, bear market, and start calling for $15,000. That would be epic. I would feel so bullish if that happens. So could we give it a chance that this could be a, you know, because a second wave, right? That we are in the second wave already, and the second macro wave, which is going to take months to develop, right? It could
take very long.
This being an ABC, and we thought we're inside of an ABC second wave, and could correct down to 50%, 618, right? Even 78 from the lows of 2022 to the highs right now from the previous month, right? Which would be very, very interesting, right? It would be very, very interesting. Yeah, I mean,
I mean, you can go down to $27,000 and still be bullish. But what I do like about the scenario, Andy, is to say that, well, if this does play out, right?
Yeah.
This move over here, oh my word, you're going to have to hold on to your hat, because the wind's going to blow you away. Because then this means this is a 1, 2, and this is a third wave. And third waves, as you can see over here, are very explosive to the upside. They're aggressive, they're explosive.
That's
going to be absolutely face melting price action.
That would be it would be a kind of in confluence with the by the end of the year, right? It should be the recovery for the end of the year. You could see then 2, 3, 4 months of a corrective structure now. It's going to be very interesting. I would definitely give it a shot, as in I would be buying like crazy if we were to get that massive big corrective shakeout. Anyway, we're just gonna have to see what happens. See what happens.
Have some dry powder. Just have some dry
powder. It's definitely a scenario. Let me just share the charts 1 second, because I want to do a little bit of Fibonacci timing, stuff like that. If you don't, the whole stream has been you've been an hour talking about Bitcoin. We've been saying we're going to talk about a bit of news. We're going to go through the comment section to take a look at
we haven't even done any of that.
This is what happens, guys. Hopefully you have enjoyed. If you have enjoyed, smash up that like button, subscribe to the channel. We do provide information and technical analysis every single day. We've just been blinded by Bitcoin higher time frame now during the last 30 minutes, which is good.
Playing out all the scenarios.
It is good. I think a lot of people enjoy. A lot of people come to my channel and also your channel just because of Bitcoin. A lot of people maybe don't care about altcoins and news. I had a few tabs open on news here, but we've basically gone over an hour on the charts just with Bitcoin. Now it's my turn, so we're going to be another hour right now. Only joking. But that was crazy, Devil. Thank you very much for that. It was really, really good to look at different perspectives here on a higher time frame. I think the community has enjoyed. Smash up that like button, guys, if you did find that interesting. And sorry for not going through the comment section. When me and Devolt do collaborations, it's like we just because we love technical analysis, we love Bitcoin, and we just get blinded with the possible scenarios. But overall, guys, thank you very much for joining in. Let's talk about I can't even remember right now what I wanted to take a look at. That possible
Fibonacci.
This scenario, so that wave, this right over here is higher. It is higher, so it's an acceptable third wave. I think it is acceptable. Fibonacci time, if this were to be the peak high, if we're looking close to a 1-to-1, and it doesn't need to be a 1-to-1, no doubt, just going through the 382. So just after the 382, the price could recover already, right? In between 382 and 618. It doesn't have to be a 1-to-1, but a 1-to-1 would take you all the way till June of 2025. That would be crazy for a correction. I don't think it would be that long, having the elections in November and interest rates going down also by the end of the year, money printer going on. So the collapse would the big correction for a wave 2 would have to be in between 382 and 618, which would be in between September and December to start recovering, right?
Yeah.
Because I've seen one-to-ones, right? One-to-one right there. I've seen one-to-ones already, getting the inside of the recovery.
Yes.
So it doesn't mean that we need to go to the one-to-one. I do prefer one-to-ones on lower time frames, but on a higher time frame, I think it would be acceptable to start recovering from 382 and 618. So
yeah,
which is in between September and December. I mean, it does make sense. It does make sense, even though a lot of people will not agree with this third wave. But it definitely it can be in confluence with the 4-year cycle, no doubt. Anyway, yeah, just wanted to point out that about Fibonacci time, basically, guys. Yeah, what do you think, 𝗬𝗏? We're going to wrap it up. Thank you very much, everybody, for joining. I haven't taken a look at the comment section. I feel really guilty, but we're over an hour right now. Legends, thank you very much for joining. Remember that you do have the links down below in the description for those exchanges. Okay, very important about bluffing. Anybody that is following the copy trading, I am not going to resume the copy trading because I can see a lot of people haven't put the settings correctly. Make sure to take a look at the community post basically on the YouTube channel. You need to go to the community post and take a look at the exact settings, guys, because if not, the risk management will not apply. And if that is not applied, then it's not going to work, okay, for the mid-long term. I know you're doing it also, 𝗬𝗏. Guys, check out the links down below. You have insane bonuses, Bybit, 𝗬𝒛, and Bluffin, which are no KYC. 𝗬𝗏, thank you very much. Check out 𝗬𝗏's channel. Anybody that is not following 𝗬𝗏, he has an insane technical analysis every single day. 𝗬𝗏, thank you very much for joining.
Thank you so much, Andy. And also for my community, Andy's YouTube link is also down in the description. Go check him out.
Thanks, 𝗬𝗏. And we will speak very, very soon. Let's do another collaboration very soon.
Thanks, Andy. Thanks for having me. Cheers, everyone.
Bye-bye.